Hello everyone and welcome to The Explainer. Today we're jumping right in to decode one of the most powerful inventions in human history, something you definitely interact with probably every single day.
We are talking about the corporation. It's a concept so fundamental to our modern economy, we kind of just take it for granted. But what is it really?
You know, to really get your head around what a corporation is, you have to start with its most basic and honestly kind of strange characteristic. It's this brilliant solution to a very old, very risky problem.
So imagine this. You and a friend have a fantastic idea for a new tech startup. Let's call it Innovate Inc. Right away, you need to lease an office, buy equipment, hire people. All of that costs money, and it all involves risk. So what happens if it doesn't pan out? How do you go after that dream without putting your own house, your car, your entire life savings on the line?
Well, the solution is just pure legal genius. You literally create a new, artificial person in the eyes of the law. Suddenly, Innovate Inc. isn't just an idea anymore. It's its own legal entity, totally separate from you and your friend, the owners. This new person can own property, it can sign contracts, it can borrow money, and it can even get sued all on its own.
Now, this new legal person can come in two main flavors. Right now, your startup, Innovate Inc., is what we'd call a private corporation. Its ownership is closely held, just by you and your co-founder. But hey, if you hit it big and start to grow, you might one day decide to go public, and that means selling tiny little pieces of ownership on a stock exchange to thousands and thousands of investors.
Creating this separate legal person, well, that's the key that unlocks a whole set of powerful advantages. You can almost think of them as superpowers that let a business grow in ways that would be pretty much impossible otherwise.
There are 5 main advantages that make this whole structure so incredibly attractive, and you'll see how each one builds on the other to create this powerful engine for growth. So let's break them down and see why they matter so much.
Okay, this right here, this is probably the most critical superpower of them all. Limited liability. It creates a protective firewall. Let's say Innovate Inc. takes out a huge loan to build its app, and then the business fails. The creditors can only go after the corporation's assets, its office stuff, its bank account. They cannot touch your personal savings, your car, or your house. This is the absolute game changer that encourages people to take risks and invest in new ideas.
And this one is another brilliant piece of the puzzle. A corporation has a continuous life, totally independent of its owners. So if your co-founder at Innovate Inc. decides to retire and sells their part of the company to a new investor, the company doesn't just stop. Nope. The ownership simply changes hands, and the corporation itself just keeps on trucking, potentially forever.
But of course, you knew this was coming, right? These incredible superpowers don't come for free. There is definitely a price to be paid, and there are some pretty significant trade-offs you have to think about when you choose this powerful and pretty complex structure.
This slide here lays out the two sides of the coin perfectly. Over on the left, you see all the awesome advantages we've just been talking about. You've got that separate legal existence, that game-changing limited liability, plus it's super easy to transfer ownership, and this is a big one. You have the ability to raise huge amounts of money by selling those little pieces of ownership we call shares. But then you look at the right side, and that's the catch. Running a corporation means a lot more complexity and higher costs just to keep up with all the government regulations. It also means you have to be really transparent, with detailed financial statements and regular reports. All those informal handshake deals you could do in a small partnership, yeah, those are replaced by very formal processes. So the bottom line is that with all this greater power and protection comes a whole lot more responsibility. As the founders of Innovate Inc., you can't just make decisions on a whim anymore. You need to have formal board meetings, you have to keep meticulous records, and you're going to be under a lot more government oversight than a simpler business would be.
Okay, so now that we've got a handle on the structure and its trade-offs, let's look at the actual engine that makes it all run, the shares that represent ownership and fuel the company's growth.
The entire idea of corporate ownership is built on this really elegant concept. The company's total ownership is just broken down into small, identical units called shares. So to raise money to expand, Innovate Inc. can simply sell some of these little pieces of ownership to investors who are betting that the value of their shares is going to go up.
Now, before a company can sell a single share, it first has to set a ceiling. In its official founding documents, what's called its Articles of Incorporation, Innovate Inc. might say that it's authorized to create a maximum of, let's say, 10 million shares. This number isn't real yet. It's just a potential, a legal limit on how many shares could possibly exist.
So from that big potential pool of 10 million authorized shares, Innovate Inc. might then issue or sell 1 million of them to get the business off the ground. These are the shares that are actually out there in the hands of the founders and the first investors. This number represents the real current ownership of the company.
Here's probably the best way to think about it. The 10 million authorized shares, that's like the total amount of cash a bank is allowed to have in its entire vault system. But the 1 million issued shares, that's the actual cash that's currently out in circulation, being used by people every day. One is the potential, the other is the reality.
So after all that, what are the most important things to really lock in? What are the core pillars that truly define what a corporation is?
It really just boils down to these three foundational ideas. First, it's a separate legal person. Second, it gives its owners limited liability, which protects their personal wealth. And third, its ownership is chopped up into these easily transferable shares that let it raise money and, well, live forever. These concepts are the bedrock that allowed our little company, Innovate Inc., to even exist in the first place.
This whole legal structure is just ingenious. It has enabled incredible economic growth and innovation all over the world. But its very nature as this separate, powerful entity also leaves us with a final and pretty provocative question to think about. What happens when the goals of this artificial person, a person that's programmed to seek profit and growth, what happens when those goals don't line up with the well-being of the actual people and the society it was created to serve? That's something to chew on.